Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Todd Bubba Horwitz. How you doing today, Bubba?
Darrell, great to be back with you. Lots to unpack here. It's a crazy one.
Yes, it is. So I want to start today with just a little bit of context setting. So obviously over the weekend, and this is being recorded on March 9th, you all. And so over the weekend, oil shot to close to $120 a barrel. We had a sharp reversal from apparently there was some news about the G7 countries coming out and planning to release from their strategic petroleum reserves and such. And so the oil price per barrel, fell to close to, $100 or whatnot. And so it's been kind of some volatile trading there. The Dow was down about over 1,000 points overnight, and then we saw a reversal there and such. And so I just want to get your outlook on the markets today and just what do you see moving forward?
Well, I think today was, fairly predictable in a lot of respects. I mean, we had broken down through some pretty key support in the major indices. So the follow-through selling is not a surprise. Now, the real key here is not to chase them down. The real key is if you're a seller, as I will be, you're waiting for a rally to come back and get them. Now, we've seen some partial retracement overnight. We've cut our losses probably by 40 or 50% of the overnight losses, but still significantly lower here. One of the things I'm noticing is volume has not picked up, but the volatility index of the VIX has been going crazy and is up over 30, which usually that means there's probably a short covering rally coming in here because we've been under some pressure the last few days anyways. So I would look for a short covering rally to look to sell it. As far as crude, this may be one of the greatest selling opportunities of all time. However, anytime there's a great opportunity, there's great risk that goes along with it. I mean, last night when the crude oil was pushing up towards 118, 119, you had to think about selling it. These are prices we haven't seen forever. And when you look at it, when you really do the logistics about it, it isn't that big of a deal. And we can produce more oil here in the United States. We have for ourselves over a 300-year supply of oil based on current usage. And the usage is going down. So I think that, again, you got to look to be a seller of this fear rally. And the best way to understand why it's fear is if you go out and look into the future and look at future oil contracts. The oil keeps coming down as you go out into the future. The prices continue to drop, and they're significantly lower 6 months from now. So all we're saying is that right now you're seeing a fear trade. The fear is pushing it higher. The nervousness, just if you remember, just a few short years ago, we went negative for the same reason. Okay? Mm-hmm. So this is an opportunity. But again, one thing that everybody has to be aware of is with big opportunity also comes big risk, and you must understand if you're wrong, where your exit's going to be so that you have enough capital to remake the same trade again.
Yeah, for sure. So you mentioned great selling opportunity. So unpack that a little more for me. I'm thinking that you're thinking that this rally isn't going to be sustained and that eventually there's going to be some type of resolution to these disruptions in these chains and exports of oil to other nations and such. And so just curious in your perspective.
Well, first of all, I think that obviously the blockage in the Strait of Hormuz is where the issue is coming in. The United States and President Trump aren't going to sit still. If this continues, they're going to go take care of it. All right. But look at the price of oil. We have basically gone up over 100% in less than a month. Okay, markets don't move like that. This is I remind everybody to go back and take a look at the silver chart when silver ran up to 120. Look when gold ran to 5,700. Everything is pulled back from those levels. There is not enough buying power to perpetuate these ridiculous rallies. Not to mention what it's going to do to inflation, not to mention what it's going to do to the general economy. But from a trading perspective, these parabolic moves can never be sustained. We've watched this. You've seen it in many, many products over and over again. And that only tells you that, there may be a little bit more room to the upside. But now the risk in oil is to being long oil here. And if you're long oil, you should be taking your profits off the table or at least hedging these prices, because there's a much greater probability that there's going to be a big sell-off, and we will get back to where we were actually trading based on true fundamentals and on true markets, which is back in the 60s.
Okay, gotcha. Okay, so interested in your thoughts on this, because when you brought up the Trump administration isn't just going to stand still while this is happening. And I'm thinking of inflation. I mean, obviously inflation ticking back up, that's going to be a major problem. The gas prices have already started ticking up.
Gas prices are up over 60 cents.
Yeah, I wouldn't filled all my tanks like the last yesterday.
The issue is that we have the ability to take care of the problem. But again, too much fear gets priced into markets when you see things like this. It's the same as the volatility index, or what's called the VIX. Too much fear gets priced in. And of course, we know that fear doesn't hold on for long, and you see markets resume. In fact, the VIX, as you and I are talking, is about ready to go negative on the day, okay, after being up about 4 points or $4 earlier. So that's telling you that the fear itself is subsiding in markets. We're seeing a little bit of a rally. It'll be the same thing in crude oil. I mean, again, it's easy for me to say and easy for me to execute because I've done it. This is what I do, but it is not comfortable for everybody who trades it or watches it themselves. But yes, the long-term effects of the economy, inflation hasn't come in at all. I mean, inflation is still higher than they're telling us.
Yep.
We're in a K-shaped economy, which means that only between 5 and 10% of the population is enjoying what's going on. The rest are struggling. We're losing jobs at record numbers, and there are only going to be more jobs lost due to AI. So the overall general economy stinks. Okay.
Yeah.
So how the equity markets maintained and were able to hold up, and of course, what's going to happen to demand for crude oil if prices continue to rise? The demand's going to dry up, which is going to bring the prices down by themselves as well. So just from an overall market view from the top, it means that we will see lesser demand, so prices will fall on their own, besides the fact of all this fear that's been built into the price of oil.
Okay, gotcha. So we've talked about the markets being overvalued for a while. I mean, the S&P still near all-time highs. I mean, the Dow's come off its 50K mark that was touted by many well-known figures. And so I'm curious do you think this could poke that bubble? I mean, because when we look at like the S&P to gold ratio or the Dow to gold ratio, it's been rolling over, but the Dow and the S&P still remain relatively high. And so I'm kind of curious if you see that these indices going through a bigger correction at some point.
I think there's going to be a very dramatic correction. I mean, there's a couple of key things to look at. The Case-Shiller CAPE index, which is now under 40 with the selling, but let's just go to where it was. It was over 40 in the PE ratio with an average mean of 16. So you were way overvalued based on that index. Also, the stock market last week was valued at 306% of the M2 money supply, okay, which has never been that high. The closest it ever came was in the 90s during the internet bubble. We all know the results of that. Wow. Markets have to take a breather at some point. They cannot continue to stay overvalued forever. And I would expect that this is going to be a pretty nasty correction. I've been wrong for the last year. I mean, again, I'm not going to sit here and tell you that I'm a genius. I think we're going to see a 40 to 60% haircut. Again, I can't see. The banks, to me, are over leveraged. Delinquencies on auto loans, delinquencies on home, high interest rates, a Fed that is too stupid to know how to deal with these markets and tries to play with these rates, which only created higher inflation in the first place. We're dangerously close to being in stagflation, which is the worst of all. So for all those reasons, I expect to see some pretty heavy selling. It doesn't mean there won't be rallies. It just means that there's going to be some pretty stiff selling, and I could see in the next few weeks a haircut of 10 to 15%.
Okay, so we're about 2 months from Jerome Powell being replaced. I guess there has to be a Senate hearing and such. So curious if if we go through this much pain, are you seeing the Fed intervening in some way with either money printing or adding liquidity to the system or whatnot? Curious in your perspective there.
Although they really can't do anything right now because they've already painted themselves in a corner. I mean, just take a look at it. Over the last 2 years, they've cut rates 5 times. In the meantime, the 10-year notes have gone up 100 basis points. So, what everybody does not understand is that what the Fed does for the benefit of the banking system. It's not doing it for the benefit of the consumer. Okay? A Fed rate cut does not necessarily translate that your interest rates are going down, which we can see by mortgage rates, which are still extremely high in comparison. I mean, not really high, but they're high in comparison to where they were. But all they've really done is allowed the banks to make more money, okay, because their spread of borrowing and lending has increased because we see the 10-year notes are higher, the Fed funds rate is lower, the spread is wide, okay? So what is the Fed going to do? Well, they can't cut rates here because the inflation factor, it comes into play. So they've really painted themselves into a box, and the biggest problem with the Federal Reserve is they refuse to allow the free market to trade. True interest rates would be higher than they are now if the Fed would keep out of it. And their mandate is not to manipulate interest rates. Their mandate is jobs and price stability. Okay, so this rate cutting cycle that they went through was silly. I think President Trump is wrong for wanting to cut rates. Of course, they want to cut rates because it lowers our debt service. But at the end of the day, if you would let the free market trade and allow it to trade freely, we would find out what real interest rates would be. And they would not be at 6%, they'd probably be higher.
Yeah, for sure. So obviously higher rates, this creates strain on some of the initiatives of the Trump administration, I imagine, with the reshoring. Trump mentioned we need a $1.5 trillion military budget and such. And so it seems like there's more and more spending and wanting to increase the budgets, and which will increase the deficit. I think the CBO's numbers for where the deficit and the debt's going to go are astronomical and such. And so, I'm kind of curious in your perspective there.
Well, I mean, the debt is ridiculous. This is the problem. But government makes debt. They don't make any money. They don't make profit. They make debt. They put the burden on the taxpayer. Why isn't it that the government doesn't have to live on a normal budget like you and I do, okay? And they give away and spend all this money. I have no problem spending for defense, but it's all the other ancillary programs that we give away money for no reason, okay? I think that we have to cut back our spending because, again, listen, it's good for gold, it's good for silver, it's good for platinum, this high debt, because that's where the money's going to flow to. But at the end of the day, okay, we need a government that says this is enough. We have to cut debt. We've got to take care of Social Security. And what I mean by Social Security is Social Security is going to run out of money. Okay, but the simple solution is to say, okay, the new retirement age is going to be 78. Because if you go back to the original socialist plan of Roosevelt, when he put in Social Security, the average living age was 62, retirement was 65. So the Ponzi scheme of Social Security, which it is, okay, it's always borrowing new money to satisfy the debt, worked fine because people would die before they would collect Social Security. Now, people living well past 65 and the average living age is 78. So you need to adjust the Social Security. Now, obviously, you can't do it to people that have worked their whole life, but you have to say, if you're just coming into the workforce, the new retirement age is 78, because otherwise they're going to run out of money. And it's not that they're going to run out of money, because all that's going to do is increase the tax burden to you and me, the taxpayer.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper cake. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Just thinking about this whole thing with obviously Social Security, trust fund is scheduled to be run out. I mean, raising the age to 78, that's political suicide.
That's why it never happens. Is exactly right. But that's why the voters, listen, the old people control the country still. Okay.
Yeah.
But that's why the voters and the politicians have to say, look, it's not going to work. And all you're going to do is be paying more. Okay, that again, at some point you got to draw a line in the sand and say enough. And in that, look, it's not going to happen in my lifetime, but I'm 30 years older than you. So hopefully it'll happen in your lifetime, because you cannot keep kicking the can down the road and hoping that you're going to come out of it, because you cannot borrow your way out of debt.
Yeah, for sure. Okay, so on that note, I mean, Social Security has a lot to do with retirement. I mean, and I think we're heading into a retirement crisis. We probably already in one when you look at the amount of retirement savings and such. So just curious in your perspective on the retirement situation of America.
Well, Social Security should not be your main source of retirement. That's the other side of the equation, right? I mean, we do have the ability to put together money in your IRA, but people like to spend too much. They like to spend more than they make. This is the problem when you have, right now, you have credit card companies extending and saying, hey, you can charge something today and not have to pay for it till 2027. Well, most people are going to fall for that trap. And what they don't realize is that the interest rate payment's going back to today, even though I don't have to pay for it till 2027 if I don't pay it on time. You've got the talk of 50-year mortgages. People aren't going to be diligent and use the 50-year mortgage and buy a home they can afford. They're going to buy a home that they can't afford, because the payment's going to be smaller, because we're a buy-the-month society. That's the real problem. If people would take care of themselves first, and that means out of every paycheck, you put something away for your IRA, and you put something away and you cut down, some of the things that you do so that you have money when you retire. Because listen, I don't know who could possibly live on $3,000 a month or $3,500 a month in Social Security when you can't even, it's hard to pay your rent than $3,500 a month.
Yeah, for sure. And, there's been a lot of articles about the amount of Americans pulling from their 401ks to make ends meet. I just think that just compounds on the issue significantly. Okay, so let's talk about gold, right? So obviously gold has run significantly. We haven't really got the response that you would think we would get with a something of this magnitude with Iran and all of the disruptions that have happened there. So curious in your outlook on gold from the short term.
I love gold. I think gold is great. Now, I think you had the reaction. Remember, in today's news cycle, the Iran thing wasn't a total shock. It wasn't a surprise. It had already been priced in to a lot of the markets ahead of time. Okay. You saw a pretty big rally. Now, from a technical standpoint, gold and silver are just in consolidation. Okay. But they're consolidating and getting ready to make the next move higher. Obviously, the more massive the debt goes that we create, the higher the likelihood of silver and gold rallying. And I think that's what you're going to see. I think they're going higher. I mean, I would expect to see probably this year gold up another 10, 12%. I would expect silver to be back over 100 again. I think that we're going to see buyers come into these. But you had the huge rally that everybody got laid away and wasted on because they chased it up to 120. And then, of course, you had a $60 drop, okay, after that. That wiped out a lot of investors. That wiped out a lot of people because, again, they continue to over leverage, chase things up, and then they have to sell out and wonder how they lose all their money. Okay, but from a investing standpoint, gold, silver, and platinum are a place to put your money. I think they go higher. I think they continue to go higher. But right now, I think we're just in a consolidation period. But you cannot over leverage yourself trying to buy too much of it. You got to buy what you can afford, so that you can pay your mortgage and pay your car payment and do whatever you need to do.
Yeah. So are you more on the physical gold side or
always physical? I don't think there's enough paper in the world to cover the amount of gold. Okay. Let me rephrase it. There's not enough gold in the world to cover the amount of paper that's written on it.
Yeah.
Okay?
Yeah.
I think that, look, if you're trading, you want to trade paper. I mean, I trade futures, I trade paper, but I own physical. And I think everybody should own physical metals. I think that's a much better way to go. You're not dependent on the paper because, again, it is my belief that there's not enough gold in the world to cover the amount of paper that's written on it.
Mm-hmm. What about the mining stocks?
They're okay. I mean, again, I'm not a big fan of those stocks. Okay. I think there's too many funny business going on there. I don't necessarily care. I don't play many of the miners. When I buy metals, okay, if I'm investing in them, I am buying them and I am storing them. Okay. I am taking physical delivery of stuff. I don't want to be involved in anything. Now, again, trading is one thing, but I'm thinking about investing. Something that I'm investing in, I want to touch it, feel it, and hold it.
Mm-hmm. Got it. Yeah, that makes sense. So you mentioned trading the futures markets and such, and obviously there's a lot of skepticism on the futures markets. Obviously, with how many paper contracts there are per ounce of gold and ounce of silver and such, and so. Many people suspect like there's manipulation in the paper markets and such. And so as a trader of the paper markets, I'm curious in your perspective on that.
No, I don't think so. Listen, markets still take price discovery. So if somebody's trying to manipulate price lower, they got to find a buyer. And they seem to always find a buyer. Okay. There are times when you could see an artificial rally with undue buying or an artificial sell with undue selling. But at the end, it still takes a buyer and a seller to create the right price. Okay. So it's hard to manipulate an asset, okay, that has a two-sided market that isn't controlled by anybody. And that's the point. So, manipulation is tricky. I don't think that they're manipulated at all. I think there's some things that go on, and you might have some bigger traders that have more money that might try to step on them for a while. That's fine. But again, the buyers can walk away. Okay. Mm-hmm. And let the price fall even further. I mean, when I was on the trading floor, if we didn't want to be involved, we walked out of the pit and didn't have to do anything. Okay. So again, it has to take two sides. So if there was true manipulation, there would be no buyers or no sellers when the markets are trying to be moved. There is a lot of manipulation, however, in the fiat currency system, which is a totally criminal system to begin with. So.
Yeah, for sure. What do you think about the price smashes, though? I mean, so when we see gold, close at a certain price per ounce measured in dollars, and then all of a sudden during hours of illiquidity, it gets smashed down, and so I'm kind of curious of your perspective on that.
Well, I mean, that's part of trading, but it's a zero-sum game. Somebody's making money on that trade, somebody's losing money on that trade, right? So again, yes, overnight when market's a little bit thinner, but they always will revert back to where they should be, and where again it still comes to buyers and sellers meeting. So I can't get to that point where I'm going to say it's out and out manipulated, because there are traders involved. And as you saw, gold last night was down over 100 at one point. Okay, now it's down 57. Okay, yeah. So again, the buyers came in, they stepped in. In fact, the NASDAQ is just now turning up to only down 80 points right now after being down over 600. So again, it takes two sides to make the market. They can't make the market go in a direction unless they're willing to commit funds to buy it or commit funds to sell it. Okay. Yeah. So again, where do I find? I can't find manipulation in that.
Okay, got it. What's your thought on the CME? Like in like the CME having these hours where they either close trading or I think at one point there's data centers or something like that were overheated or whatever it was. So the CME, what's your perspective on that?
Well, I mean, the CME is an electronic exchange, just like the NASDAQ is, and there's obviously some funny business that can go on. We go back to the flash crash when many brokers shut their systems down and didn't allow you to trade them back in 2010. Look, the controlling bodies can do a lot of things because of its electronic. You just turn the switch off. Okay. But what they have done is they've raised margins to make it almost impossible for the average guy to trade with the amount of margin they're requiring now. There's a lot of things that go on, but you still need a clearing member and a clearing house. Okay. But I think what you're going to find out, and I think it's probably sooner than you think, you're going to see 24/7 trading. Okay. We're already 24/5 on a lot of products. And of course, I don't know if you're aware of it, but the CME is coming out with single stock futures again. Okay. Which they tried once before, it didn't work, but they're coming out with it again, that are going to be 24/5. I say we're less than a year away from 24/7 in all markets. Okay. And they can do what they want, and they're going to listen. When you get crazy markets, they're going to try to restrict things and make margins so high that you can't participate because, of course, let's face it, all of the rules in the system are meant to help the brokerage houses so they can make more money on their overnight rate. That's why margins go crazy and go higher, to prevent you from trading, from losing your money, so they can collect their interest rate overnight.
Okay. So you mentioned single stock futures. You said it didn't work in the past. How come that didn't work in the past? Do you know?
Well, in the past, there was enough to trade, and you didn't have, zero DTE options in equities. Now you've got a lot of zero DTEs. You've got every other day expirations now. So all they're really doing is they're forcing this into almost the binary option type of market where there's going to be multiple expirations. And now with more people trading, okay, and futures, the single stock futures have a chance to work because not only will they have the future, but they'll have options on the future. And it's another way to trade. Plus the fact that, with FINRA's day trading rule versus the CFTC that doesn't have one, that makes it very prohibitive for a lot of traders to trade equities because of the minimum of 25,000 and maintaining a balance of 25,000 all the time. So I think that now with more activity in the market, you have a real chance for these single stock futures to work. Okay,
got it. So earlier you mentioned that gold, silver, platinum running higher because of debt and this fiat system. And so are there any other drivers that you see for those metals?
Well, I mean, inflation, fear, solid hard assets. Okay. I mean, those are, again, obviously good reasons. And of course, if we go back in history, gold and silver have rallied throughout history, as has the equity markets have rallied throughout history. I don't think that that's going to suddenly change anytime soon. And I think that that continues. And I think that, of course, you just need to look for good, solid opportunities to be able to invest. But again, I'm going to warn back again, just invest what you can afford. Because the worst thing, you don't buy gold because you want to sell it tomorrow. Okay, if you're buying physical gold. You buy gold because you want to hold it throughout the duration for whatever period of time that you're going to hold for. But you're not trying to day trade physical metals. Okay, you want to day trade, you day trade the paper markets because, again, you're not at risk. But if you buy paper markets for an investment for long term, if I'm right, there's not enough to cover. If you ever want to exercise your rights, then you can't get it.
Gotcha. Do you have any thoughts on the silver to gold ratio? Is that something you follow?
It's coming very nicely. It was over 100. Now, as of today, it's 60. I think it comes even farther. I mean, the original ratio was 15-1, but I could see the ratio coming down into the low 50s without much of a problem. 40s maybe.
Okay.
I mean, I think silver's going to, silver's all of a sudden become a hot commodity from an industrial standpoint now too, as well. Hotter than it ever was before. So all of a sudden, the value of silver, not only for other reasons, but now industrially has become much more vogue as well. So I think silver has a chance to close that gap even further.
Okay, got it. And then platinum. So currently platinum futures are trading about $2,159 US dollars. And we traded as high as close to $3,000 this year. And so curious in your future outlook on platinum.
Well, I love platinum. I mean, I think it's a poor man. It's now it's about it's about 40% of what gold is. It used to be double gold. I think it's a value. I think it's a discounted item. Obviously, it's not as used as much, but it still has value. And I'm sure they'll find another reason. Certainly, I buy like 50% gold, 30% silver, 20% platinum.
Okay.
That's how I kind of break it down when I buy it.
Yeah. So obviously platinum has a lot more industrial uses, but I mean, most of it's mined out of South Africa and Russia. So that kind of gives a jurisdictional risk to that metal.
Yes.
Okay. So agriculture. So this has been brought up to my attention, mostly around fertilizer, the issue with the Strait of Hormuz, and the fertilizers that come out of there. I believe sulfur and some other chemicals that come out of there that are used in many industries. And so, curious in your perspective on agriculture, do you think we get a rally in these stocks? Are you seeing what are you seeing on that front?
I think the grain markets go a lot higher. I mean, I follow them. I've been long them. I was a buyer of corn back when it was at $4. Wheat when it was at just over $5. I think that they have a lot of room to go on the upside, and certainly with some of these shortages, it could push prices even higher. But they've been depressed way too long, and of course, one of the issues is there wasn't enough new money flowing in. But I think now you're seeing the funds starting to get back involved in the grains. Okay. And of course, they're not real active, but once they start going, they start pushing. And I think we see the market rallying now. We see them up this morning. Okay. And I think that continues to go. I think that, first of all, most farmers before are planting at a loss right now. Okay. So they're taking a lot of risk to not make any money. So I think just out of natural, it needs to go higher as well. And I think you will see, if the equities continue to sell up, I think you will see some new money coming into these markets, which will make it much stronger and, of course, push them higher. And I do expect to see grains go higher. I expect to see livestock go lower. I think that's been well overpriced and well overdone for quite a while. So we'll see how it plays. Okay.
So how complex is this agriculture investment side of commodities? I mean, it seems pretty complex. I'm not an expert in it at by no means. But just curious in your perspective as being a trader of agriculture, like how complex is this sector?
It's like trading anything else. Very simple. I mean, the expiration, the futures contract you want to buy, or they trade options on them as well. They have different expiration cycles. You just have to be aware of the expiration cycle. What is your time frame? What are you looking for? But it's no different than trading the S&P. It's no different than trading gold. They're all the same. Okay. It's a very simple process. I mean, it has certain factors that will affect it, weather and the WASDE report and other things. But at the end of the day, it trades technically like any other market. And if I took the letters off of what it was and showed you a chart, I would trade it the same way no matter what. And the accessibility and the liquidity at the CBOT, which is actually the CME now anyways, but there's plenty of liquidity, there's plenty of opportunity. And if you're not a fan of the futures market, there are some stocks that, do represent the grain markets, like DBA, the agricultural ETF, or, there's wheat, there's corn, which are some Tecrium ETFs. I'm not a big fan, but those are ways to get involved as well.
Okay. All right. And then I do want to get your perspective on Bitcoin. I think we've talked about crypto in the past, if I'm recalling. Just curious in your perspective on that side of things.
I love it. I wish I owned more. I didn't. I missed most of the move. Okay. I mean, but anyways, I think it's going higher. I thought 60,000 was a great level after the big pullback. It's even higher today. But I think long term, you need to have some exposure. I've not taken my entire portfolio, right? But if you took 3 or 4 or 5% of your investment portfolio and put it through crypto, I think you'd be happy over time. I think that it's the way we're going. I think it's real. You can see it's real because you've got the SEC approving it. You've got the CFTC approving it. So if they approve the products, that means that they're now believers in what's going on. Okay. I think you have to be very careful at your selection. Certainly, I wouldn't get away from, Ether and Bitcoin, Solana, maybe Ripple, the ones that have a lot of big market cap value. There's still too many, crooked coins out there, so to speak.
Yeah.
That you have no idea. But if you stick with the majors that have immense value, okay, let's say in the billions or trillions, okay, then you're fine. You've got something that's just like a company. But trying to, the Dogecoin or, some of these high flyers, you hear them on the news, I'd be very careful with those.
Yeah. Okay. So when you say immense value, let's unpack that a little more. So like, some of the audience may be like, oh, some of these coins are, what are they even producing? Right.
Well, they don't produce anything. They trade and they give you, they're kind of like, gold and silver. They're an investment group. Okay. But when I mean value, for example, the market cap of Bitcoin is over $1 trillion.
Yeah.
Okay. The market cap of Ethereum is is 244 billion.
Mm-hmm.
Okay, the market cap on Ripple is 83 billion. Okay, so I'm talking about, I want a market cap that is legit, that is big, that means that there's actual trading and things going on, and it's not being controlled by one party.
Mm-hmm. Okay, so what about utility? So obviously a gold and silver investor is going to look at crypto like, okay, what utility does it have when you have a lot of utility for the precious metals? So I can name off a few things, for Bitcoin, but just curious in your perspective.
Well, I mean, first of all, payment. I mean, if you have to wire money to somebody else, it takes forever. It's a pain in the ass. You can wire Bitcoin or cryptocurrency instantaneously within seconds. Okay, the blockchain, which is the organization underneath that transferred all this. I mean, look, you have the younger generation are believers in this, and it's nothing more than a payment system, but it's a better payment system than the U.S. dollar, than any of the other fiat currencies, because it cannot be manipulated. Okay. It cannot be controlled by the central bank. It's controlled by the buyers and sellers that trade it. Okay. And of course, it's used for payment, and more places are taking it for payment. So eventually it'll be cheaper to transfer, faster, okay, and easier to deal with, plus the fact that the markets are open 24 hours a day, 7 days a week.
Okay. Got it. And any thoughts on tokenized gold?
No,
Nope.
I don't really have much. I don't like playing in these starting to mix more into these asset classes, right?
Yeah.
I get kind of nervous when they start playing with these things a little bit, because it's always, remember, anytime they create something, somebody's getting paid a fee to do that.
Yeah, for sure. I mean, it does, obviously add another layer of counterparty risk, but oftentimes the argument against gold and for Bitcoin was that you could take your Bitcoin and the seed phrase across international lines. And
well, that still remains true, right? If you live in China and you've got $1 million worth of gold, you're not walking out of China with $1 million of gold. But you can certainly walk out with a flash drive, okay, and a dead wallet, okay, of Bitcoin.
That's why they created tokenized gold, Bubba.
Yeah. Again, but now I'm looking at another level of craziness. Again, I'm old, so I'm not a big fan of all this high technology. And if you look at some of these ETFs at the fees that they charge, to me, it's almost impossible. So again, it doesn't make me right.
Yeah.
It's just my opinion. Yeah,
I do think it resolves a issue, but it does add another layer of counterparty risk. I mean, especially, I think Tether's a huge company, multi-billion, and they're selling these gold tokens where you buy the token and you get access to an ounce of gold, right?
Yeah.
And then it's also traded 24/7. So
it's kind of like you're too young, but it's kind of like the silver certificate that you used to get with the U.S. dollar. Okay, and you could take that silver certificate, U.S. dollar, and walk into a bank and get a Morgan silver dollar.
Yeah.
Okay, you can't do that anymore.
Okay. So you're saying history tells us.
So once again, I go back to look at what they've done to the system. You bring more regulators in, you bring more regulation, you bring more opportunity for them to scam my cash.
Yep. Got it. Yeah, that makes sense. I've been looking at the crypto sector just because, it seems like one of the only sectors that, or one of the few sectors that have not been getting any love. I mean, you've seen the Dow at all-time highs and such. Bitcoin's trading at 50% off. Many of these coins have had many blow-off tops. I don't necessarily think it's over for that industry, and so I'm very cautious about it. But it seems like it's the part of the sector that's on sale.
Well, it is, but it has had, like I said, it has had a nice rally off of the bottoms. And, listen, you're talking about the Wild West of trading still, right? I mean, for Bitcoin to move 5,000 to 10,000 a day is not that big of a deal.
Yeah.
Okay. Again, this is different than some of the other asset classes that are much more established. But certainly, again, they can trade, they're liquid, they give you opportunity. So, I think that, they're on sale and they're probably a buy down here somewhere. I mean, I did buy some at 60,000, and I think that, they'll go higher. But certainly, from my perspective as an investor and as a trader, I don't ever want to see the straight spike up, because I'm not looking to sell. I'm looking to build momentum, very much like I'm watching in gold and silver and platinum with them sitting in consolidation, looking for that move to take them much higher and build strength, and then find the next level to hold versus the straight spike up and straight spike down.
Got it. One way I've been also looking at that particular sector with cryptocurrencies is owning the roads and the tolls versus like the toll booths versus like the vehicles, and so I've been looking at different aspects there. And so I own a bunch of the miners. I own Coin. I own MSTR. I own that stuff. I mean, I get it, and certainly. And nothing wrong with that either. That is one industry that I will play in that field because it's different than the gold and silver miners, not as established, and there's still plenty of room for movement. Yeah.
Okay. These are still fledgling companies, no matter what they do.
Okay, got it. So do you have any price targets on gold and silver, platinum for this year?
I think gold could reach over 6,000 this year. I think silver will get back to 110 to 120 this year. I think platinum will get back to 3,000 this year.
3,000. Okay.
Mm-hmm. I mean, they could go higher. You hear people talking about 20,000 gold. Look, I don't make those kind of predictions. I think it's stupid. Okay. Eventually they'll be there. Yes. But there's so many levels that can hold it in before you get there. I think a legitimate target, a 10% rally in gold would not surprise me. A 20% rally in silver wouldn't surprise me, and a 30% rally in platinum would not surprise me. And I think that those are reasonable expectations that you can expect without going crazy and off the grid trying to get someone to buy some stupid product because you told them that gold's going to $10,000 this year.
Yeah, that definitely happens. And then Bitcoin, are you still relating that? Well, not you, but the markets typically relate that to like the NASDAQ, tech stocks. I think it's been trading in.
I think Bitcoin gets back to 100,000 before the year's over.
Okay, what's your driving factors for that?
I think that it's becoming more and more a front mainline currency. It's becoming more and more mainline through companies, through everything else. It's being more and more accepted, and I think more and more money will flow into it. And of course, if we start to see the sell-off in the equities, and we start to see some of these other things sell off, that money will be looking for a home, and that home will be the grain markets, it'll be the crypto markets, it'll be the gold and silver markets.
Okay, got it. All right, well, thank you for the outlook, Bubba. Where can people connect with you and your trading? I know you do some trading services and such, and so where can people connect with you?
They can go to bubbatrading.com and check me out. And of course, for your audience, I've written 2 books on option trading. I'd be happy to give PDF files to the books to your listeners. All I got to do is email me direct at bubbatrading.com, and I'll send you a copy of the books.
All right, sounds good. Well, you all have the information. Be sure to hit the subscribe button if you haven't subscribed yet. And thank you all for watching the show. And thank you, Bubba, for coming back on.
Thanks, Darrell. Always great to be with you, man.